Federal Reserve Chair Jerome Powell delivered a speech on September 25, 2025, discussing the economy, interest rates, and the impact of evolving policies. His remarks highlighted the Fed's dual mandate of achieving maximum employment and stable prices, especially in an unusual economic environment. Here's a brief overview of his key points. Economic landscape. The U.S. economy is showing resilience despite significant shifts in trade, immigration, fiscal, regulatory, and geopolitical policies. However, the pace of economic growth has moderated, with GDP rising at about 1.5% in the first half of the year. Consumer spending has slowed, while business investment in equipment and intangibles has picked up, largely due to the AI build-out. Labor market. The labor market is less dynamic and somewhat softer, with job gains slowing sharply over the summer months. The unemployment rate edged up to 4.3% in August. Powell noted an unusual and challenging development of decreased supply and demand for workers. Inflation. While inflation has eased significantly from its 2022 highs, it remains elevated relative to the Fed's 2% target. Total PCE prices rose 2.7% over the 12 months ending in August, with core PCE prices, excluding volatile food and energy, rising 2.9%. The pickup in inflation is largely attributed to higher tariffs, which are expected to cause a one-time shift in the price level spread over several quarters rather than an ongoing inflationary problem. Monetary policy and rate cuts. The increased downside risks to employment and elevated inflation have created a challenging situation with no risk-free path. The Fed therefore judged it appropriate to take another step toward a more neutral policy stance, lowering the target range for the federal funds rate to 4% to 4.25%. Powell emphasized that policy is not on a preset course and will continue to be determined by incoming data, the evolving outlook, and the balance of risks. AI's impact. Powell described generative AI as an emerging technology that could be very important, but stressed it's too early to make bold statements about the long-term disruptive force on the labor market. He